can master supply and demand, and you'll be able to make so much more money from trading. These are what I'm going to be covering in this section. But if you want this course to work for you, and you really want to master supply and demand, I'm going to start off by teaching you what is supply and demand, why you should trade it, how to draw and find supply and demand zones, how to actually track these zones, when you should enter for the trade. Hello friends, welcome back to Investment Professor, where real investing meets real results. I am AK. I'm going to teach you how I personally trade supply and demand, my own secret supply and demand strategy. What is supply and demand? Supply and demand are basically aggressive selling and buying. That's it. We want to see aggressive buying and selling because this tells us that all the big boys, like big banks and institutions, are entering the market and pushing it in that direction. I want you to look at these candlesticks right here. Big fat momentum candles tell us that there is a lot of aggressive selling, a lot of momentum, and volume pushing the price down. On the right side, we see green momentum candles, which tell us there's a lot of aggressive buying, a lot of buying pressure, and a lot of momentum pushing the price up. These are what you should be looking for when trading supply and demand. These momentum candles tell us that smart money is in the market. On the other hand, if you see small candlesticks like these, this is not demand. Small baby buyers are not what we want to see because there is no volume or momentum from the smart money at all. Why should you trade supply and demand? Let me tell you why I trade supply and demand. I want to trade with the big boys who have a lot of money. I want to react to the price when these big boys enter the markets. The best way to see them entering the market is by waiting for supply and demand. Supply is when the market is going down aggressively, and demand is when the market is going up aggressively. I want to see these nice momentum candles that tell me the big boys have come out to play. Remember, we are retail traders, we are brokers. We do not have enough money to move the market, while these guys are dealing with millions and billions. Let's say you have insider information and know the big boys. Smart money, billionaire traders, whatever you call them, are buying at this key level right here. Would you enter for a buy? You are a fool if you said no. Of course you would. It's literally free money if insider trading wasn't illegal. Because you know these people have the money and the power to move the market. Obviously, you want to ride the wave with them. The last thing you want to do is trade against them, but that is what a lot of retail traders do. Now that you understand why you should trade supply and demand, let's talk about how to actually find these supply and demand zones. If you found this useful, please don't forget to like and subscribe to learn more. How to find supply and demand zones. The first step is that you want to look for at least 3 momentum candles in a row. For example, you can see right here we have spotted 3 green momentum candles in a row. It can be more, like 4 or 5 green candles in a row, but the minimum is at least 3 momentum candles in a row. Important. You do not want to see tiny small candlesticks like these. You want momentum candles, which signify the activity of the big boys. In this example, I'll just use these 3 green momentum candles. The next step is to find the area where the move started. In this case, the move started from the previous candle, so we mark it. Using your rectangle tool, mark the high and the low of the previous candle to create a box. Drag the box to the right. Now the area between these 2 lines becomes the demand zone. So what do we do next? We wait for the price to come back down to this zone and then enter for a buy. In this case, the price already did that. The price literally went down to retest the demand zone before shooting back up. If you entered for a buy here, you'd have made a lot of money. Here's another example. We spot 3 momentum candles in a row. Using the rectangle tool, we box the high and the low of the previous candle and drag it to the right. This becomes your supply zone. The last time the price was at this zone, it got pushed all the way down. Now we wait for the price to return to this area. Observe what happens. The price comes back to this zone and collapses. Method 2. Consolidation. When the price is moving sideways and not going anywhere, draw a box to capture this entire consolidation. Observe what happens when the price touches this consolidation box. the price often reacts and reverses, respecting this zone. Method 3. Wicks. Wicks show us that the price is rejecting a particular area. For example, multiple long wicks in an area indicate a strong demand or supply zone. Draw a box around the area with wicks and drag it to the right. When the price returns to this area, it typically reacts strongly. By combining these methods, you can identify strong supply and demand zones. How to trade supply and demand zones. Let's walk through an example. We spot 3 green momentum candles. This signals the creation of a demand zone. We look at the previous candle before this up move started. Using the rectangle tool, we mark the high and the low of this candle and drag it to the right, defining our demand zone. We wait for the price to return to this zone to enter a trade. Key tip: wait for confirmation. When the price returns to the demand zone, don't immediately enter. You must wait for confirmation that the price will reverse. For instance, the price may give us a long wick candlestick, a doji, indicating indecision in the market, a bullish engulfing candlestick, indicating buyers are back in control. Once you see confirmation, enter a buy position. Place your stop loss below the last higher low or below the demand zone for safety. Set your take profit level at a key resistance area or supply zone. When the price respects your demand zone and moves upward, you will hit your take profit target. Advanced supply and demand strategy. To take your supply and demand trading to the next level, you need multiple confirmations before entering a trade. This ensures higher confidence and better accuracy. Let's go over the advanced approach step by step. Please don't forget to like and subscribe. For example, enter at the demand zone aligned with Fibonacci 61.8%. Place a stop loss below the demand zone. Set take profit at the Fibonacci 27% extension. Example, trade setup 1. Initial setup 2. You identify a strong demand zone using 3 momentum candles and box it. You pull out your Fibonacci retracement tool and notice the 61.8% level aligns with this demand zone. 3. Entry confirmation. 4. When the price retraces to this zone, you observe a bullish engulfing candle, multiple long wicks rejecting the zone. You enter a buy position at this point. 5. Exit strategy. 6. Stop loss below the demand zone. Take profit at the -27% Fibonacci extension. 7. Outcome. 8. The price respects the demand zone and Fibonacci level, reverses upward, and hits your take profit target. Pro tip: manage risk. When you see strong confluence, you might increase your risk slightly, e.g., risk 2% of your account instead of 1%. However, always use proper risk management to protect your capital. Please don't forget to like and subscribe. I always recommend that you don't simply follow my trading style or copy the trades I share. Whether it's stocks, forex, or any other market, it's essential to do your own research and analysis before making any trading decisions. Now it's time to put what you've learned into action. Take notes, apply the concepts, and work towards mastering your own strategies. Let's grow together. Thank you for watching, and I'll see you in the next video.